Big milestone alert! We are thrilled to share that our Investing Angles YouTube channel just hit 5,000 subscribers. A huge thank you to each and every one of you for your trust, engagement, and support. Your enthusiasm drives us to deliver even sharper insights every single day. Now let's dive into today's weekly digest because the markets are shifting fast and the next big wave is already forming. In part 1, we'll talk about volatility, Friday's bearish move, start of a reversal or just a healthy pullback. US dollar building a bottom. Is this the next rally already in motion? Bonds and yields. TLT turning bearish while yields flash bullish strength. What's next? Commodities. Oil. Strong bearish signals across multiple frames. A major breakdown ahead. Natural gas, powerful bullish weekly closure. We revisit our February 1 call and discuss upside targets. Special feature, Microsoft multi-angle deep dive, breaking down Microsoft technical setup and projections. And this is just the beginning. In part 2, we'll tackle precious metals, can gold and silver regain their footing, US indices, Nasdaq, Russell, S&P 500, are the bullish trends fading? S&P 500 sectors and major stocks, Apple, Microsoft, Tesla, where do they stand? And special feature, XLK, tech sector deep dive, how the tech sector is positioning for the next major move. Now let's break down the charts and navigate the week ahead. Let's start with volatility. What we are seeing here is the closure of the day. On Friday, volatility formed on the daily frames, a couple of bearish candles, and we are talking about different volatility tracking indices and instruments here. And what is interesting, that first of all, that the bearish candle could be stronger, but it was put up at the end of the day, and an interesting point that this circled area here is the area when we see a very unusual move by the 50-day moving average, which is a blue line. So it was likely pulling down, but some event happened and it decided to go up. That's a very strange move, and I would say that it reflects the current situation. So the chances for moving higher and rejecting this bearish candle are fairly significant. Now let's this is the 3-day chart on the US volatility index, and so far we are seeing very healthy development. So if it wasn't volatility, I would be expecting at least 5, maybe 8 weeks candles in a row, the green ones, but let's see. This is volatility. Now, if we look at the bigger frame, the weekly that closed on Friday, and this is strong bullish continuation candles across. So far, we are not seeing a reversal pattern. And if we look at the monthly frame and the 15-day frame, some of them formed like 15-day candles. The same on Friday. So these are strong continuation candles, and at this point there is a very good chance that the next 15 days will also be bullish. Speaking about the Elliott Wave formation for volatility, this is the chart that we shared earlier with our subscribers, and this is what were expectations at the end of the February, and we can see that volatility technically pulled back here, forming wave A and B, and now it is advancing higher. The wave, however, looks corrective. So the first wave was impulsive. This wave is corrective, and at least it is not very clear what kind of structure it will make. So if it is a diagonal, then it needs at least one more higher high because this wave here that I circled is impulsive, and we know that for diagonal it should be a very coherent structure, so that all waves in the same direction should be of the same structure. Well, that's the perspective, and at least we are looking for higher prices, not immediately on Monday, but there is a chance that the volatility will continue its increase. We posted a big volatility report, weekly report on our website, so you can check the charts and our discussions in bigger details there. Now let's move on to the next section of our discussion is US dollar index. What we are seeing here is the potential bottom being formed, and on Friday the daily candle formed another bottoming candle, and there is a very good chance that this could be a closed bottom. So on the 4-hour frame, which is very significant one, we are seeing a freshly made right at the end of the day bullish cross, and this is a very significant one. If we look at the bigger chart, so this type of cross was made back in 2023, this one. So this one even bigger than 2023, that led to a huge rally in July 2020, year of 2023. So that's the perspective right now, and we are looking for a bullish reversal. Perhaps it will be a very significant one, maybe 5-10%. Well, but we'll see. And if we look at the frame at Elliott Wave formation, this is what we would be expecting for the dollar index. Wave 1 that started in September, the big wave 1, impulsive wave. This wave, the recent weakness was possibly a very sharp zigzag, an ABC, and interesting that the last wave of this zigzag could be an ending diagonal. If this hypothesis confirms, then we might see a very sharp and swift move towards the origin of the diagonal, towards the 109, 110, 110. That's the perspective. That's what we are seeing for dollar index. Now let's move on into the bond section, and we'll start with yields for 2, 5, 10, 20, and 30 year. What they closed on Friday was bullish candles, and this is something that we discussed previously on Thursday in our daily report, that the yields have a good chance to continue upward, and this is exactly what happened. And if we look, for example, at some bigger frames, let's do it on the my 10-year chart. Oh, I'm not seeing it. So let's say the 10-year yield, if we look at the 3-day frame, we are seeing a very strong bullish engulfing on a 3-day frame with a good chance to continue higher. So let's see how it makes in the next couple of days, but candle so far signaling a move higher. And this is the 20-year yield at the micro level. The chart, that what we are seeing here is the potential impulse formed of the bottom. A fairly clean 1, 2, 3, 4, 5 wave. The wave, the last couple of days were most likely a pullback, and now we are seeing a development of wave 3. If this hypothesis confirms, then by the end of March we might see waves in the 5% range. That would be a very interesting and very unexpected development for many investors. Now let's have a look at TLT. What TLT is telling us. is quite a different story compared to the yields. So exactly the opposite. So first of all, the daily frame is bearish, and what we are seeing is the confirmation of a reversal on the daily frame, and the bigger candles also are shaping as bearish ones. So this is the 2-day frame or 3-day frame. So all of them are bearish at the moment. On the weekly frame, TLT formed a bearish harami, but it requires a confirmation. But what I can say at this moment, that this candle has a fairly significant technical support. And this is the 5-day frame, which will be closing on Monday, a very important one. And if the candle closes below 90.97, it will be an inside down, practically bearish engulfing. And if the candle closes below 90.80, it will be a very strong one, almost guaranteeing a move down in the next 5 days or more. Now let's have a look at TLT chart, Elliott Wave chart, that we've been tracking since February 25th. That's what we are seeing is a potential bearish flag or a zigzag. What is happening here is that TLT right now at a very important position. So if it breaks below the 89.68, it will be technically invalidation of an impulsive structure upward. And if it happens, we will be considering this wave down that started on March 25th. This wave down would be considered an impulsive, potentially wave one of a bigger impulse downward, like I said, like we pointed here in the red. And if this move happens, then the blue path, alternative blue path here, will be invalidated. Well, that's the perspective. And the final picture I would like to show here is the Canadian 5-year yield. As I'm a Canadian, so this is of very big interest. First of all, this is a confirmation of a bottom on the 2-day frame. So now we have daily and 2-day frame bullish, and this is a very unexpected behavior, especially considering the fact that Bank of Canada was planning to cut the rates further, but it looks like the candles are not agreeing with this, or something happened with it. Something happens with the directions. Let's see how the Bank of Canada reacts to this. And the next meeting is coming this week on March 12th. We might see at least a rate hold, if not a rate increase. That would be a very interesting to watch. Now let's move on to oil. Oil is falling hard. So what we are seeing here is a lot of very bearish moves. First of all, and on Thursday, oil completed this little doji that had a potential to become a morning star. And at the beginning of the Friday, we were thinking that this is, oh well, that could be a reversal, but it lost the power, and wasn't even able to close above the Thursday's high. So this candle right now is neutral. Most likely it will be just another consolidation candle before moving lower. And on Thursday, we said that oil needed about 6% in order to invalidate this potential bearish candle. Well, at the beginning of the day, it looked like it was doable, but again, the Friday ended in a very disappointing bearish candle. And on top of that, oil made a fresh MACD bearish cross on the weekly frame. So the bigger frames are also shaping bearish, and I'd like to emphasize on the 15-day frame, we had a very strong bearish continuation candle, and it happened on March 4th. Now let's move on to the next chart. This is the short-term, mid-term perspective for oil. We've been tracking it since February 24th, when oil was 71. Since then, oil lost 6% or more, depending where you are tracking. And this is the potential for a bearish flag here in the middle of the wave. So far, this wave is corrective, and I'm looking for two potential counts. First is the red one, as this wave could be wave 4 of a bigger impulse that is being developed, or this could be a mid flag for wave 3, like a wave 4 of a lower degree for wave 3. The perspective here, the approximate target for the flag would be about 68.5. That's the perspective for the next week. And let's move on to Brent. So this is our long-term chart for Brent that has been in effect since May 2024. Nothing happens here, so everything remains intact. That's the perspective for Brent for the next couple of months. That's what we are seeing. And the next chart, this is the most interesting one. First of all, I would like to say that this is the one that we've been tracking since January 18th. We said that there are way too many similarities between the technical developments of Brent in 2025 January and the preceding months, and compared to January 2020 and the preceding months in 2019. So now perhaps this Brent is at the very beginning of something very significant. So if this pattern holds further, the next week could be a big one, similar to this one, March to 6th of 2020, when oil lost 30%. This is a huge candle here, huge candle, and this would be the next one. If oil follows the pattern precisely, the next week would be a disaster for oil, and it would end somewhere around 49.50 if this is happening. Well, that's something to keep in mind. And once we are in the oil department, we always look at the candles for big oil players like ExxonMobil, Chevron, and Conoco. What on Thursday we called that these formed bullish engulfing candles, and we were expecting they to move higher on Friday. This is exactly what happened, but whether it's sustainable or not, that's a big question. So we discussed this in details in our weekly update that was posted yesterday. So if you're interested in these three and the perspectives for the next moves, you're welcome to visit our website investingangles.com, where we discussed it. Now let's move on to natural gas. So what we are seeing here, natural gas has been incredibly bullish and very resilient to any bearish moves. Even on Thursday, it had potential bearish engulfing, but it was pulled back and became only a dark cloud cover. On Friday, it started with a move down, which could be the end of the wave, and now it is pushing upward. The 2-day frame is closing with a bullish candle, and the weekly closed with a strong bullish continuation candle, and the most importantly, it pushed about the 200 weeks moving average. And what does it mean for Elliott waves? That's the perspective that we've been tracking since February 1st, when we identified the bottom and made a big call when oil was 309. Since then, natural gas advanced 44%, and we are seeing more chances for it to continue this rally towards higher high. Well, that's the perspective for short term. If you're interested in long term and mid term, we are discussing them regularly in our daily updates, and also the freshly posted weekly report that was on our website of yesterday. For those who are interested in Energy's pack, which includes daily reports for oil and gas, you are welcome to visit our website, investingangles.com. And now the special feature of this part 1 is Microsoft. This is just to give you a little heads up of what is coming in the next part, in the part 2. So Microsoft, it looks like it has been forming a bullish bottom and was ready to move higher. However, I wouldn't be so sure about it because the daily candles are not as significant as they would be. And if we look at the weekly frame, for example, it closed with a very regular bearish continuation candle. Nothing surprising so far. It is holding on the 100 days moving average, but technically the stock is not healthy and the chances for moving lower are significant. If we look at the 15-day frame, it just confirms our concerns, and we are seeing that the big bearish candle is being developed. So if this is a 15-day frame, it is closing on Monday. If nothing happens on Monday, no very strong rally, let's say what we would need, Microsoft would need about at least 4% of a rally in order to mitigate this candle, then we would consider this as a bearish continuation. And the monthly frame is being a very informative for the stock, starting with this December gravestone doji, which appeared for a single reason, that the stock is turning bearish. So far, it doesn't disappoint. Now let's have a look at technical chart. This is MACD cross, bearish MACD cross that we are tracking since October. We said that Microsoft is technically following the pattern that it produced in February, March 2022, and so far it's been following it with great precision, especially from the candles perspective and from technicals perspective. At the time in October, we said that this is going to be a big one, and identified the potential target to 85. This is in case Microsoft repeats the experience of year 2022. However, it's not everything. Let's move on. This is the Elliott Wave chart for short-term Microsoft. What we are seeing is an impulsive wave down in July, August. Then Microsoft tried to recover from it, tried to form something, but it wasn't impulsive wave and most likely WXY as we identified it. Now, starting from December, Microsoft is forming an impulse down, potentially an impulse down. This is the blue path, and this is the 285 target that we identified in the previous chart. So far, Microsoft is down 16% of the most recent top in July. And now, let's have a look at this chart. So first of all, I'd like to point to this pattern that we are tracking since October. Microsoft, it looks like it's its favorite, the most favorite pattern, head and shoulders. This is the same one, similar one that we had in 2021, 2022. And now Microsoft is forming a very significant one. So right now it's flirting on the neckline, and if it breaks in the next couple of weeks, well, we will be looking for potential to drop towards 320, 305, which would be a 35% of the top. And now the biggest chart, Microsoft long-term perspective. So far, from Elliott Wave perspective, we are looking at two potential scenarios. First of all, it's a super cycle that Microsoft completed here, which is a blue path. And if this is the case, then the Microsoft would be looking for return to 235, 180. And this is obviously the worst case scenario. And another potential here is that Microsoft form wave one of a bigger, higher degree. And once wave one is complete, then we would be looking for a return for wave two, and this would be the most typical Fibonacci levels return for pullback for wave two between 341 and 268. And we talked about it way back in October. So far, our chart remains unchanged. Now we're just tracking the potential, seeing what kind of wave is developing and what Microsoft would be looking for. So far, this has been flawless. Now that wraps up part one of the week's market breakdown, and the signals couldn't be more important. Volatility is shifting, but is it a real reversal? The dollar is positioning for a rally. Will it confirm? Yields are strengthening and TLT is on the verge of a major reversal. Oil's bearish structure is setting up for a sharp decline, while natural gas is reinforcing its bullish case. Up next into part 2, gold and silver's early warning signs. Nasdaq, Russell, and S&P 500. Can the bulls hold? Sector breakdowns and key stock analysis. Apple, Tesla, and more. Special feature, XLK, tech sector deep dive. Stay informed and stay ahead. Premium insights. Subscribe to our stock and crypto package for just $10, covering major stocks, Bitcoin, and exclusive Discord access. Weekly reports and daily updates. Get in-depth market analysis at investingangles.com. Join our growing community. Follow us on YouTube, Twitter, Telegram, and Reddit for real-time insights. Don't forget to like, share, and subscribe so you never miss a major market move. Thanks for watching, and as always, happy trading.